Hello again, welcome back to the channel at DigiFox Labs. Today we're going to be talking about a post from, ironically, thewashingtonpost.com and OPEC. Now, first and foremost, none of this is financial advice. We are not financial advisors. Everything said here is 100% our opinion. So, with that being said, let's get right into this article. Coming to you from Washington Post, we see OPEC allies move to slash oil production, eliciting blistering White House response. White House officials reacted after the OPEC Plus coalition moved to curb production in response to falling prices. Now, on this channel, we focus highly on cryptocurrency as well as stock market and a lot of financial stuff. And we are deviating a little bit to oil because all things considered, everything affects everything. It's a domino effect. When one thing goes, something else is reacted upon. So let's go ahead and dive a little bit further into this article as much as we can. Because we do not subscribe to this, we are going to get as much information as we can. We see here that a coalition of oil-producing nations led by Russia and Saudi Arabia announced Wednesday it will slash oil production by 2 million barrels a day. A day, not a week, not a month, a day. In a rebuke to President Biden that could push up gas prices worldwide, worsen the risk of a global recession, and bolster Russia in its war in Ukraine. So let's go ahead and highlight this right here, global recession. Let's be honest. The definition has been changed. We're not going to indicate by whom or why, but we are currently in a recession. If you think otherwise, go ahead and do your own due diligence and you will see why we say so. So let's go ahead and tell you why we believe oil prices may actually stay stagnant and maybe slowly creep up, but for the most part, they're not going to skyrocket, at least not just yet. And here is why. We're going to show you what's going on in the American government. We see here that the United States government has 3 branches of itself, right? And we have the legislative, the executive, and the judicial. Apologies. We see here that the legislative makes the laws. And we see under that is Congress, Senate, House of Representatives, right? And so Congress pretty much encompasses the Senate and the House of Representatives. So you're thinking, if you are not in America right now, you're thinking, so what? What a waste of my time. Well, here's why. Tuesday, November 8th, 2022, the United States elections will be held on that day. During this midterm election year, all of the 435 seats in the House of Representatives, let's go back now. That's right. They're the ones that make the laws for the country of the America. Let's go ahead and see that all of them are up for election, as well as 35 of 100 seats in the Senate. So we go ahead and look over here and we see that most of, if not all, the lawmaking positions is up for grabs. Why is this important? Because oil is not going to go running off a rampant or on a rampage, right? Because of the elections. After this date and after everything has been finalized and everyone is sitting in their designated positions because they earned the elections, right? Then we will see a skyrocket in oil prices, which would reflect this article right here. So the charts do not lie, right? Because on this channel, we trade charts and not farts. So let's go right into it. We see here, this is the trading view of a price of a standard barrel of oil. So what does that mean? For every barrel of oil, it is roughly around $88.16. Oh, now 15 cents. Oh, 16 cents. Oh, now 15 cents. As you can see, it's very, very volatile is in terms of pences or pennies rather. And this is how much oil is right now per barrel in USD. And we see here that it is currently on a downfall, right? Now, what's key to note here is it was in a falling wedge. All of this could have been predicted of the fall, right? We see here that it went all the way down to $76 a barrel and actually started creeping up. That started roughly around mid to late September of this year. Now, the way you measure this move is this way, right? You go ahead and you get the top of this falling wedge and you go all the way down to the bottom and you create your percentage, right? Then you go ahead and you move it and you place it right at the breakout area. And would you look at this? It literally almost to the exact dollar went up to the price area. You can see right here. It went up 12%. It matched it. Okay, so that has been completed. So what is the next move for oil? Well, ladies and gentlemen, that's yet to be seen, but we could go ahead and actually do some charting on that, right? So we see we are actually forming if we zoom in quite a lot, and this is on the 4 hour, okay? If we zoom in right here, and yes, this is pink, and there's a reason this is in pink. I'll show you later on. We can see here that it is forming yet another falling wedge, which means once it falls, it is going to break out with the same way of moving from top. Oops. Went ahead and made that mistake there. Let's go ahead and do that again. Start from the top to the bottom, and its breakout is going to be roughly around maybe here, maybe here, maybe here. We don't know. But as you can see, it's going to stay within this region. And what you need to look at is look how small this falling wedge is compared to this one. Literally, you are looking at roughly since August all the way to roughly around September. That's almost a good solid month or so. And then this one is going to only going to encompass roughly around what? 2 weeks? And then it's going to come back up again. And so that right there is literally in line with November, what was it, 8th? November 8th, yes. November 8th, which is roughly around this date right here. So where is it going to go? We believe on this channel, it's going to actually fall within this triangle, more or less. It's going to bounce around in here, come around, and may even go all the way down to $80 a barrel, right? And then it's going to skyrocket. Now, what you need to pay attention to is this right here. What you see here, you see a pink line right there, yes? And you're seeing slowly at the top of your screen another pink line. And we're going to go ahead and get out of the 4-hour chart because every candle represents a 4-hour and go to the daily. What you see here, ladies and gentlemen, is a megaphone chart on oil. Usually when it bounces off the bottom sector, which we just accidentally moved just then, what you see when it bounces off the bottom sector, it goes all the way almost to the top, if not to the top. Now, there are channels within this, but what you need to realize is there is a high probability that it can bounce off of the bottom part of this pink line and go all the way up to the $130 region of a barrel of oil. Last time we saw stuff like that was literally March of 2022, but we are going to smash that, right? Maybe ever so slightly, and we very well may trace back all the way to the Great Recession, which was back in 2008. And back then, ladies and gentlemen, was $145 a barrel of oil. So how can we play this, right? You make money going up, you make money going down. So right now we have the UCO, which is a stock ticker symbol for the ProShares Ultra Bloomberg crude oil. Right now it is trading at $31, and right now it is actually falling down, just like we stated earlier. It is following a barrel of oil. Makes sense, right? I believe so. So what you're going to see is it's going to come down and bounce off of the outer side of this triangle, because ironically, would you look at this, it too was in a falling wedge. That's right. All of these things move hand in hand, more or less, give or take two. So once it comes down and bounces off of this, then it is off to the races. Where is those races going to come? Well, you can probably go ahead and just hold on to it for a little bit, because we all know it is going to go up after the elections, right? And so it could very well follow the next resistance, which is going to be roughly around the 38 region. Now, if you're going to go ahead and sell at the 38 region, you're going to make a profit if you were to get in. Let's say you were not able to follow the market. You may get very well a 20% to 30% make on your money. Now, you could go ahead and hold it, but again, we highly recommend once you're in double digits of percentages, go ahead and take some off of the profit, get yourself some nice shoes, get yourself something to get yourself a trophy of some sort to remember this trade and things of that nature, or go ahead and reinvest it. Hold on to the cash. Do not lose it, because remember, the way you win is to live to fight another day. And so that is how we would play this one on UCO. Full disclosure, we have taken a position in UCO. Next one you need to look at, and this is a high risk, high reward, a stock that you're going to be going into if interested, and if you want to follow us. This is going to be ticker symbol CEI, Camber Energy Incorporated. Now, this has been beaten down with a horse. It is roughly around 16 to 17 cents. Now, this is a high mover whenever oil does spike up. As you can see here, once we get this fixed on our screen here, let's go ahead and move this down a little bit, move this down a little bit, a little cheat sheet right there. There we go. So as you can see here, whenever oil does spike up in price, this really takes off. We see here that the last spike was roughly around March. Before that, it was around August 21. Before that, it was around February 21. If you go back and look at history books on the Google, or the history links on the Google rather, you will see that it correlated roughly more or less around when gas prices were going astronomical. So where can we see this going? Well, let's do a simple Fibonacci retracement, right? Let's go ahead and get your Fib retracement. Here is where you have a lot of resistance, and it's coming down here, and so that is where you're going to be roughly seeing. You're going to see roughly an 8, or not 8 cents. I'm sorry, can barely see that. There we go, a $1 area. Now that is very much high risk, and in a bear market, that you definitely do not hold your breath on that. But if you want to play it safe, what you have to do is you zoom in a little bit further, right? A little bit further, and this green line right here is called the MA50. It is the moving average of the past 50 days of this stock. And so what you want to do is you want to see, and if you, again, this is for conservative players on a high risk movement, go ahead and take some profits at that region, because if you were to get in right now, that is roughly around a 30. Oh, oops, I went the wrong way, didn't I? That is roughly around, let's do another measurement, shall we? Price movement from bottom to top. That is going to be to the 50 MA, more or less, roughly. It's probably going to touch base around there. You're looking at 50% movement. I mean, that is, how many stocks can you get for 17 cents, right? Now, there is a high probability of there being a split somewhere and affecting your profits. But at the end of the day, once you have profits, take them off the table, especially when it's a high risk such as this. And another thing you need to note, please get into, this is not one to hold because of earnings. Remember, whenever earnings is coming up, usually stocks like to dump around that region. You can see that earnings was coming up right here, and it took a shat right here. Here's another earnings, and look, it was continuously taking shat right here. More earnings, and you still have chronic diarrhea going all the way down to potentially maybe even now. So is it a buy for CEI? Yes, I highly recommend you start dollar cost averaging in, because once this moves, it usually moves overnight during closing hours. So with that said, good luck to your oil tradings. We are not financial advisors, keep that in mind. So with that said, happy days, happy trading, and good luck to every single one of you.